All right, it is time for our financial focus, and for that we bring in our analyst, Steve Budin, as we do every week. And Steve, today's an important day because it's the start of tax season. So I know it's not the deadline to file your taxes, but you should get started earlier, right?
Yeah, this is the first day that you could actually file your taxes. So I know you're going to run over right after this and get to work on that for that big refund you're getting.
Yeah, exactly.
Yeah. Just because it's the first day to file, it's most important that you're accurate in your filing so you don't make mistakes and you don't have to amend your returns. And most folks out there who are employees will have to wait for their W-2, which is your salary report and your wages report. The one thing I would say, if a lot of our viewers have investment income, that's when the Form 1099 will begin to go out in the middle of February. Over the last few years, a lot of investment firms have been correcting these. So if you're receiving 1099 income, it may pay for you to wait a little bit. But it is interesting that today is the day that you can start filing. And the earlier you file, the quicker you would get a refund if you're entitled to one.
And we've actually run some stories recently that refunds could be a little bit delayed this year. So you definitely want to start out sooner, especially if you're counting on that refund a little bit later. I'm curious, the 1099, the W-2, you need those to start filing your tax. Is there anything you can do while you're waiting for those forms to come in?
No, the only other thing is sometimes firms will have those accessible online. So your employer or your investment firm or your bank may have those forms available today. You may have to wait to get the mail to you. So if you do have access to the online access, you might be able to get them quicker.
Doesn't hurt to start checking in now since we're now in tax season.
Yeah.
Okay, so the other big story that we've actually been reporting on for about a week now is that there's a new system for computing your credit score, and you actually think that this could lead to a more accurate credit score. Can you explain that, how it's going to work?
Sure. FICO is the largest credit reporting agency in the country, and they've come out saying over the next few months, it should go into full effect during the summer. Your FICO score can be affected. Usually what they tracked up until now is strictly your payment history. Did you or did you not pay your bills on time? Now what they're able to do is track your balances. So they may say Ross is paying his bills on time, but he also keeps a low balance, and that will certainly impact your rating favorably, as opposed to somebody who has a lot of credit card debt and still pays their bills on time. So I think it's a much more accurate way for the credit reporting agencies to determine somebody's ability to pay.
And then on the flip side, the negative side, if you will, is that if you have a lot of debt and you are continuing to not make those payments on that debt, is that going to hurt you more than it did in the past?
Based on the current formulas, it might, only because if you have a large balance, even though you're paying your credit cards on time, you are getting credit for that. Now they're going to look at that outstanding balance. So if you have a large balance and you're only making minimum payments, the risk of you going up as a bad payer can go up as well. And incidentally, too, they're adding personal loans. That has been a growing industry. People going out getting personal loans, those will now be impacting your credit report as well.
And just really quickly, for people who may not realize, why is a credit score so important to you if you're trying to make big purchases down the line?
Yeah, great question. It determines two things. A, whether you can get a loan, and B, if you do get a loan, what the interest rate you're going to pay. So if you keep your credit score high, you're deemed a lower risk of default. Banks will be more willing to lend to you at a lower interest rate.
And that could affect your ability to get a car, a house,
That's right.
Any of those big purchases down the line.
Yep.
All right, that was your financial focus for this week. Steve, thanks so much for coming in. We'll see you next Monday.
Sure.
We'll be right back.